Yet another powerful session. You know our series, which is backed by Concept Cracker. Once you understand the concept, how you break down and apply concepts to solve problems. So, in this past paper discussion, my advice, I am reminding you, ideally you have to write this answer by yourself and come and see how well you did it, right? So I think I don't need to repeat that. So let's now see how this paper can be analyzed. So another full paper discussion, and අමාරුම තැනින් පටන් ගමු. Let us start from the end. So as you know, there are 3 sections, and we'll straight away get into the last segment where we get longer case study. And they are the first question, and as you know, how we start is actually by looking at what concepts we have to crack in this case study. So let us see whether you are knowledgeable about those concepts. If yes, job life becomes much easier, right? බලමු. So හැමදාම තියෙන එකක් තමයි මේ ROM කියන එක. Remember, I explained to you digital concept card. So when you look at it, it will tell you every information about ROM. So if you have a doubt, please go through my digital learning card under concept tracker approach to see how ROM can be broken to IR, CR, and how IR can be broken to IR factors under Tukums framework. Greek වගේද? නෑ. Those who watch, you know what I'm talking about. And very quickly you know how to get this 10 marks. Let's prove that now. So now this one, these risks also include fraud risks. So my previous paper discussion. So these sessions are arranged in the order, right? So therefore you have to watch in that way. So the risk of fraud, again, when we look at it, what should come to your mind is fraud triangle, where we said due to incentive, right, pressure, opportunity, right? So if these are there, that is a fraud risk at the entity level as well as financial statement level, right? Ideally relevant for the audit. So ideally, right, the classification should be risk of misstatement at account balance level. Account balance, for example, data is account balance and classes of transaction. Sale is a transaction. That is one level of assertion. The second level is called financial statement level, or it can also be called entity level. So ideally this is the way this classification should come, but don't worry about it. I will explain to you when you go to the risk. We have to write normally in exam 10 risk means if you write 5 points it's more than enough. So we have to simply see the action verb assess. Then list කිව්වොත් නිකන් එක bullet එකක් ඇති. Then assess කියන්නේ you need to say why that item is a risk. So 10 marks we can easily get. Then you plan to perform SAP. Now again, look at my concept card on testing strategy. SAP is a testing strategy. So how it begins is once you identify risk ROM. How do you identify ROM? Through RAP. RAP means risk assessment procedures. Once you identify ROM, you need to decide what is your FAP, further audit procedures. And that FAP logically begins with TOC, right? Test of control. And if that can be done, the next choice is SAP, right? And then if SAP cannot be done, or SAP is not enough, you are going to TOD, like a toddler, right? Now see, this is whole auditing in a nutshell as to how you identify risk and respond. I can explain this in very technical language. Auditing standard number 300, planning overall audit strategy, audit plan, and 315 about risk assessment, and go to a lot of detail. How to quickly write the answer. Now when it comes to SAP, remember, if you want to do SAP, assess the feasibility of performing SAP on sales. Now When we read the case study for this 5 marks, you need to have a framework to answer. If that framework is not there, what to write? You will not get these marks. Remember, analytics is the smart way of doing. So again, I have one concept card on analytical procedure that also includes SAP. That means without checking documents, can I evaluate financial statement through relationship? We call plausible relationship, right? When sales increase, what happened to cost of sale, right? That also increase. If it decrease, it can't be, not logical. So when it comes to SAP, through this relationship, you find, okay, there is unusual relationship that seems to be a misstatement, catch it. That is here. So there I will explain to you another framework called, if you want to do that, called RESA. Right? Who is RESA? Do you know RESA? So RESA will give you 5 marks. So reliability of data, right? So likewise I will explain to you other point under RESA when it comes to the question, starting from reliability. And so small correction there, this RESA should be E, right? RESA, reliability, and this expectation is the key, right? And whether analytical procedure is suitable for the particular assertions, right? And then what is the threshold you are saying the difference is acceptable? RESA, very powerful, right? So you know now about RESA. And then, so these 15 marks, so easy, no? We haven't read the question. Company has produced annual report. Annual report, fine. Nowadays there are a lot of annual report, integrated reporting, and from 25, the biggest challenge is non-financial information have come under SLFRS Sustainability Standard 1 and 2. Sustainability related financial information, right? Those topics are going to come in future for your exam, right? So now this annual report company has produced with the audited financial statement. Annual report has a lot of other details. The question is explain, right? Basic question. Explain whether auditor is responsible for the annual report information, chairman report, CEO report, etc. How do you get these 5 marks? Very easy. If you should know 720 standard says auditor's responsibility for other information other than financial information. The key word there is auditor has to read other information. For example, chairman says that we have performed fantastically. Our revenue has increased by 30%. Oh, so that is other information. When chairman talks about revenue, auditor should read that statement and see whether there can be MI. What is MI? Material inconsistency. Chairman says 30% increase, but actually increase is 25. There is 5% can be revenue increase of 5% can be a material inconsistency. Then what is wrong? Right? Then you have to see whether audited financial information, if sales is wrong by 5%, you may give a qualified opinion. But maybe no, chairman wanted to achieve to a 30, therefore he says 30. That means chairman's statement is wrong. And then we have to say, look here, please change, amend. And then if chairman is not amending, trying to manipulate sales, you will decide not to work for this audit client and withdraw. ඔච්චරයි උත්තරේ. මොකුත් බලන්න නැතුව පහළිරුයි. Right? See the power of concepts. ඒකයි මාර concept cracker කියන එක හරිම powerful. However, longer your book, very little you see the concepts. Once you identify application is so easy. Now let us see in how many minutes we can get this 20 marks. So that's what we are going to do now. We are reading the case study to identify at least 5 ROM. And we are talking about RESA in this question, going to get 5, and we are going to get 10 marks. Here we are going to get 5 marks, and here so easily we'll get 5 marks. Done, no? Life is very easy. So let us get into the question. Let me see whether I have get some papers. Okay, white color good. Yes, white is the best color, no? Right. Go back and then write our answer. Actually, now we'll start writing, no? So, no, we haven't read the, don't forget, we haven't read the question, right? Because we were so powerful. I hope not only me, more than me, you have to be the power, right? Like a power bank. So, now, we have to find 5 ROMs. And about Reza is very simple. Now let us see what are the 5. ඔය පහ මම 1 2 3 4 5 කියලා බොහොම easily ලියනවා. බලන්න. ඒකයි දැන් ROM හොයනකොට ඔයාලා දැනගන්න ඕන දේ තමයි ROM එක උඩින් වැටෙන්නේ නැහැ. So remember when you want to find ROM, think ROM can come in either IR හැම උත්තරයකටම framework එකක් තියෙනවා. Or it can come from the CR. This is all ROM. And then this is at assertion level, right? And then ROM can also come through overall financial statement level, right? So this is broader things. For example, that there are new people in the finance department, there is a fraud risk, very tough here. Overall financial statement level risk, anything can go wrong. Anything, anything pervasive. Because why? Either people are not good, broader reason. He's a bad person. Managing director is aggressive, something like that. Aggressive means he's cooking the books. Method harima specific. Mona assertion, the revenue cut off. The IR, if you want to further break, I explained to you, 2 COMS, CC, UMS. Complexity, change, it has something been changed, uncertainty, right? And then management bias, that's again a fraud risk factor, and then subjectivity. And control risk is a deficiency in control. This is the framework. Now let us find 5 things. Smart solution, trade mobile phone and access, they trade mobile phone accessories, desktop, laptop, printers and other office equipment. Company has been authorized agent for a number of phone and mobile phone and office equipment brand. Items are imported from manufacturers. The import restrictions imposed, this is importing, right? Remember our country situation. So there was currency depreciation, devaluation. So that significantly impacted. That impacted operations. As a result of the above condition, companies' retained earning turned to accumulated losses. My goodness, that is a disaster. It doesn't say profit has come down. The retained earning, now net asset like maybe minus, right? Entire retained earning has become accumulated loss. Now if you are a very smart student, you will also ask, how about the solvency? Can they meet the solvency test in the Companies Act when they declare dividend? But more than that, apply to COMS and see there is uncertainty, and this type of uncertainty where their entire earning, accumulated earning becomes a loss, right? Meaning a big problem sign, and that is the first risk we identify under MU. And MU is not one uncertainty, but not simple uncertainty, but we call it, that's again a concept, material uncertainty due to events and conditions that cast doubt about company's ability to continue in the long run as a going concern. Right? In that case, company has to disclose, right, those reasons and the actions. If disclosures are not done, I can connect to audit report. In the audit report, you will write a going concern paragraph. Wow, that's the full story. Going concern. The first risk we may write, definite answer is going concern. Then, but it says, however, improvement were noted in the market condition. So there is some improvement, but this uncertainty is there, no? Right? And then, let me knock off this AC, why it is not going. Oh, when? Right. So, however, 1st January, tawat prashnayak, right? January comes, VAT has increased to 18%. Previously exempted items also become liable for change. Now, if you apply Tukum framework, this is some change. The change to what? The tax rate has changed. Not only that, some items that were exempted now become liable for VAT. This has resulted in a decreased sales volume during the last quarter. So again, it is adding to going concern that there is a revenue drop also. And another thing, if you really think that now when it comes to VAT payment, there can be sometimes errors unless you properly figure out this. So we will just note that can also be a concern, right? VAT payment may not be accurately done because the examiner is giving you that context of change for a reason. That is a possible area for attention, possibly a risk, right? If you want, that can be another item of risk. Company has 3 sales centers. It has appointed 10 authorized dealers for sales. Sales are recognized at delivery point. No other condition, seems to be straightforward. There is no much complexity, right? However, dealer sales, you have to be careful how they really apply, but they simply say point of delivery. We need to ensure at that point performance obligation is transferred. The general credit period is 30 to 60 days. So then why? If it is 30 to 60 days, so then there are a lot of debtors here, 32 million here. So there are significant proportion, right? If you look at these two and compare to the total, there is a significant proportion above the credit policy. The moment you see without looking anything, you will write another risk, which is your third risk. How about these non-moving debtors? The moment you say non-moving debtors, the main question you need to ask, assertion is valuation. Has it been impaired? Have you applied SLFRS 9? Have you done using the what method? ECL method. And that requires significant assumption and judgment. It ඔය ටික ලිව්වනම් මේක තව ලකුණු දෙකක් හම්බ වෙනවා, right? දෙකේව පහක් 10. That debtors. So we quickly looked at, there is a data table, right? You see how information is connected. During the year, company has shifted its premises to a new place, okay, terminated the early agreement. Agreement is terminated. Now remember, you can't suddenly terminate agreement. If agreement is 10 years, if you just terminate, you have to still make some penalty payment or whatever. In that case, the provision standard has a concept called, this is again cracker, onerous contract. If contract becomes onerous, immediately you have to recognize that liability for the balance period. So note that point. See, that's the new knowledge. If you are a good accounting standard, if you have a good understanding of accounting standard, make a balad දෙන්න, right? So then, can there be a need for onerous contract? Now we are writing our fourth answer. Not only onerous contract, now they are going to a new lease agreement, right? The signed lease agreement is available. New place, signed lease agreement. The moment lease comes, remember there is a new leasing standard now. I mean, when it's not new, but you know the method is right to use. Using the incremental borrowing rate, how you accounting? Have they accounted for the lease properly according to the leasing standard? Accounted for the lease using the right to use model. Even some of the operating leases, you know, under right to use model, you can capitalize, right, using the incremental borrowing rate properly. Has that been done? So that can be another fifth. Now already Park identify kara, right? Then this onerous contract, and this point we can write as one point. Debtors we spoke about, and then last, the data analysis is given. There is no significant difference in the impairment provision. This is not enough. So then, because if debtors outstanding balance above 60 has increased, then why are you not revising your impairment, revisiting and making more impairment, right? So that is a question, because these companies, remember, fraud risk also comes. Now what is the one applied out of the triangle here? Out of the triangle, the fraud risk factor, they are under pressure. P is there, because then, you know, the currency, there are accumulated losses, the VAT came, there's a lot of pressure for this phone manufacturer. And then let's go to the last, this part. The sales manager, now see, we have to write a question about SAP for sales. Maybe this para has the information for that SAP. So it says, sales manager closely monitor sales trend. Sales prices are authorized by him. Okay, authorized by him. Manager monitors, that's a good thing. The prices are authorized by him, it's a control, and price list is maintained in the system. Wow, that's also good. Then price in the system, the actual quantity by each product is maintained. Good. So which means you can get quantity. See, quantity is there, price is there. If quantity and price you can get by product category, let's say these are reviewed by monthly meeting, right? Based on the trends. So what they are looking, the sales trends, discounts and promotions, based on the reports, they decide these things. Finance manager participate in these meetings, right? So now see, up to this last sentence is critical, I stop there. So, but if you read the balance, what they are suggesting, if you really look at from the SAP, now we have to think about RESA. Remember, substantive analytics is not to vouch, but can I predict what is the expected sales if I have all the quantities, the prices, quantity into prices, minus the general discount percentage, and can you say sales for this year should be 50 million? That is my expectation. Expectation. So then I compare with actual sales. Your expectation is 50 million, actual is 40 million. Right? Let's say actually 60 million, then there is a 10 million overstatement. That is above your maturity level. It's not acceptable. You investigate the difference, and that is the answer you are writing for this 5. And remember, why you cannot do that if R is not there. Is the data reliable? The reliability of data depends on internal control, and here is they are talking about the control. It is in the system. There seems to be good internal controls. And as the auditor, you can use these reports to calculate. Remember, any report, if you are using in the client, imagine, although it is in the system, somebody go from the back end and manipulate the prices and apply wrong discount. There is a golden rule in auditing. If you are going to use any system report, the ITGC, when I say IT general controls, no one can from back end change. The backups, everything, these are called ITGC. Watch my short video on IT controls, right? So the point is, if controls are good, if ITGCs are good, you can follow RESA and get this 5 marks, right? So we'll see how to write this answer. The last sentence, the variable compensation of senior management is based on the target on revenue. Very good. Including revenue, right? So that very clearly shows one risk. Remember, in the previous one of the previous case study, I told you, out of this answer, the one answer that you can definitely write in every question, the rebuttable presumption, right? Revenue recognition. So revenue recognition, revenue can be overstated under because management bias, the pressure, everything is there. So we have about 6-7 risks to write. Have we missed anything? Let's see whether we have read all the paragraph. Here I have missed one paragraph. Key members of the finance management team resign. Ooh. Why they resign? April. As a result, new team took over. So remember, I told you when it comes to if there are new members, now this company has some complicated transactions, right? And I mean, there are a lot of changes. When there are new members, the chances that they may make errors, I believe if they don't have experience, the error is high. So any difficult area in the financial statement can be affected, and that is called overall financial statement risk, right? Anything can go wrong. Overall financial statement level risk or entity level risk. And then remember, there is another one, this phone inventory also there, right? So then now this there, what do you see? The trading stock, right? Their stock value has increased, right? But the provision has decreased. And if you do a simple analytics to divide this provision ratio, for example, see 92.6 they provided last year divided by 275, so they provided about 33.6, right, last year. And now the inventory value 86.4 divided by, because the inventory value has increased, right? So that is only 19%. See the provision, why there is such a drop in the provision. So that really question the what? This trade in stocks, because this is a phone. Remember, another important point when it comes to phone, inherent risk is high. These are technology related stocks. The chances that this phone version is outdated and therefore you may not be able to sell at the same price. That's the big point that questions about inventory valuation, right? Especially the fact that whether stocks are sold at a price, company's ability to sell at a price higher than the NRV. Inventory is valued at a cost to NRV, whichever is lower. Then kochchara දේවල් ලියන්න තියෙනවද, right? I mean, that's the entire question. And with last part is only theory. Case එකේ මොකුත්ම නැහැ ගැන, annual report එක ගැන case එක කියවන්න ඕනෙත් නැහැ. Last part එක ලියන්න පුළුවන්. Now with that, we can easily write our answer. Right, so risk, if you look at now, what are the risks? The මතකෙන් කියන්න පුළුවන් නේද what we discussed? Let's write one by one. So the first point we discussed was going concern. I told you bullet points are very powerful. Going concern. And what I mean here, overall, overall financial statement level risk. Ek assertion ekak newe going concern, right? That's a pervasive one. So why going concern is a problem? Bullet point. Let us use another color, right? Due to external environment, that is currency risk, external factors, you can write within bracket currency, VAT also the challenges. So what happens is accumulated profit turn into a loss, and then not only that, drop in revenue, that is VAT, now see I am writing in red color because this part is critical, right? These represent, these are called indicators. These represent, let me වචන කෙලින්ම වෙඩි වගේ standard එකකින් එන්නේ, right? These represent events or conditions that cast doubt about entity's ability to continue as a going concern. Entity's ability to continue as a GC, going concern. And that leads to leading to keyword material uncertainty. That's coming from going concern standard. That may require disclosure. This may require disclosure in financial statement. Right, and if these disclosures are not done, financial statement can be affected, and that is wrong. And then what else we discuss? There are so many issues, right? We had only write 5. If you prioritize the big topics, right, that about, sales and debtors will take both, right? Revenue recognition. That's a rebuttable presumption, right? I mean, if you're a smart student, you can always write this word rebuttable presumption also. There is a rebuttable presumption that there is a risk of revenue recognition in every company. But in this case study, why revenue recognition is a risk, right? One reason is fraud risk factors, and that is pressure to achieve target ගහන්න අමාරුයි external environment එක හින්දා. Pressure to achieve targets due to adverse environment, right? That is one. And second reason, this is word pressure, incentive, last sentence of the case study, incentive to manipulate, since senior management remuneration is linked to revenue targets. Well done. And then third point that we can talk about, that's generally ගොඩක් තොරතුරු නෑ, but we can easily write debtors impairment. So what are your sub point? One sub point has to be, right, the impairment has not, there is an increase in what the case study says, no significant difference in the impairment provision, right? So what you can clearly see that there is a, despite the increase, in long age debtors above the credit period, despite කියලානේ පටන් ගත්තේ comma, right? There is no change in the impairment provision, in impairment charge. So what? As a result, debtors could be overstated. So what is your point? So you can add one more point. Impairment testing. Accordingly, impairment testing to be done using expected credit loss model. What is your expectation given this market condition that debtors to those phone people are struggling, even inventories are not moving, right? Expected credit loss. And this require, right? This require ඔන්න දැන් එනවා inherent risk factors. හැම වෙලේම ලියන වචන දෙකක් තියෙනවා, SJ and A, right? Significant judgment and assumption. It's very හරිම lazy, right? තුනක් ලිව්වා. Then next, our next point is, we can same way talk about inventory valuation. So what are we going to write under inventory? There we can see, here remember we did a calculation, a percentage ටික දාන්න, ඒකේ ලොකුම point එක තමයි right? Again despite කියලා පටන් ගන්න පුළුවන් නේද? Despite increase in inventory, trading stocks, provision has reduced. This is unusual. Then that is your point where you use your theory. This is phone, right? The inherent risk of phone, the technological obsolescence is high, right? Due to inherent risk. Within bracket you can say tech obsolescence. Due to inherent risk, some stocks may not be recovered at cost. Recovered means sold, requiring inventory to be written down, no? Requiring inventory, the cost of inventory to be written down, cost to be written down to NRV. Written down to NRV. So as a result, inventory may be overstated done. So now we have to write only one point, but there are more points we can write, right? So what are the other points that are overall financial statement, the competency, the new finance team? Right? Because, so what is our point here? Because they lack experience, they lack experience and complex issues we already highlighted, right? Complex accounting issues, significant complex or significant accounting issues noted. Either errors or wrong judgment, right? Issues noted. There could be errors or inappropriate judgment being made. Inappropriate judgment being made, right? That could affect overall financial statement. Many areas could be affected. That could affect overall financial statement. Reliability, reliability of overall financial statement. OFL කියන overall finance. පහක් ලිව්වා. තව ලියන්න ඕනේද? Yes, remember that lease story also we can write. Lease 6. So I told you two things to write. One is a possible onerous contract due to termination. Other one is the new lease may not have been properly accounted. We have to definitely check. New lease may not be properly accounted using right to use model. Right to use model. And where you use incremental borrowing rate, and these are generally complex areas requiring judgment, therefore there is a risk. Right? Then hatha, if you want another one, you can write VAT. That's a very straight point, that because the VAT rate has changed, there may be errors done, but we have to write only 5, we have written 6. Now let us come to RESA. I mean, that part is so easy, I told you, right? Now, that question is about question number part B, assess feasibility of SAP sales, right? So, part B, feasibility of applying substantive analytical procedure. Feasibility of applying substantive analytical procedures on sales. Now, what is the framework that I gave you to answer? Is RESA. So, me RESA wa පැත්තකින් තියාගෙන ලස්සනට උත්තරේ ලියන්න ඕනේ, right? And at the end, we will see how RESA has been covered. So, the first point that what you can say that as the sales information both separately there, you can split it, both quantity and price are available at a product level that ඒකට කියන වචනයක් අපි product level, dealer level sales break කරන තරමට we can predict. That's called, remember these are very important word, disaggregated. Disaggregated information is there. SAP can be done. Substantive analytical procedure could be applied. But condition තියෙනවා. ඒ condition තමයි answer එක වෙන්නේ. SAP can be applied provided කියන්න ඕනෙත් නෑ, එකක් already case එකේ දීලා තියෙනවා, right? SAP can be applied, right? Then you can add that point because internal controls appears to be, අපිට හරියටම sure නැහැ, we have to test it, right? Appear to be available on sales price. That means price is approved. Now if you read the question, it says sales prices are authorized. Sales prices, right? And that is authorization, no? Make a authorization is available and review by sales manager. Then I am writing in red. Data could be considered as reliable. These are done. Data could be considered as reliable. Right. Then another point that I emphasized to you about reliability is system report. However, before relying or using on system reports, golden rule එක මතකනේ. Auditor should satisfy about the effectiveness of ITGC. Effectiveness of ITGC in red, very critical, right? So then we come to X. Accordingly, auditor can develop develop an expectation කියන්නේ expected figure එක independently calculate කරන expected sales using the data discount promotion ඔක්කොම අරගෙන calculate කරනවා using independent data, right? And then next, so we discuss another point, expectation, and this point specifically, this SC is about whether analytics is suitable for particular assertion, right? Usually in this case, එච්චර දුරට technically යන්න because here you are testing, if you look at assertion, completeness of sales, cutoff of sales, so that type of assertions, analytical procedure is suitable. But අපි උත්තරේ ලියද්දී මේ ටික තිබුණා නම් more than enough. Even now you will get 5 marks. But another important thing, after you calculate the expectation, you have to compare. Auditor should then compare expected sales with what is recorded and see what is recorded and investigate. That word is critical. What is recorded and investigate difference. Investigate if the difference is acceptable. Now that is A. Here acceptability of the difference. If the difference is acceptable. What is auditor's threshold? If auditor say 1 million is acceptable within bracket, this is where auditor's performance maturity level, things like that can come. Auditor can say up to 1 million I am okay. That's my maturity. If it is above 1 million, I have a concern, I have to further investigate. Done. Simple. So then the last part of the question, part C, to get complete full marks. දැන් මට මේ ප්‍රශ්න explain කරන්න ඔයාලට ගියේ විනාඩි 10ක් විතර. Because here මමත් A to Z ලියනවා. Because then that gives you some assurance. We don't need to necessarily do that in all the cases, right? So if you look at so the balance part is annual report. Is the auditor responsible for the information in annual report? We said one. This is, I'm directly putting the bullet point, right? Remember what I told you on the chairman's report. So auditing standard number 720 applies accordingly. Auditor should, keyword here is read other information. Mami OE කියලා other information in annual report, right? To identify, that word is key. Identify what? If there is a material uncertainty. That's the key word in this answer. Material, not uncertainty, material inconsistency. දෙක අතර වෙනසක් තියෙනවා. Inconsistency. Between what? Between audited financial information, that is your P&L sales, like in my example, and other info. For example, other information is chairman's report talks about the revenue increase in my example. Then based on this, if, now you are putting if audited financial information is incorrect, if it is established, right, it will result in a it could result in a modification, qualification. It could result in a modification of the opinion, right? Modification, right? You know what a modification is, right? Qualified, adverse, disclaimer, but very unlikely in this case it may be a qualification, right? If no audited accounts are correct, if other information needs to change, chairman, Mr. Chairman, wage 30% increase වෙලා නැහැ, sale only 20%. Can you change that statement? Chairman say no, that is, in management accounts it has increased. No, then auditor has to tell this to the independent party body, and that is called TCWG. How they? Those charged with governance. Needs to change, right? Auditor should communicate to those charged with governance, full සම්පූර්ණ වචනේ ලියන්න, and request to change if it has to change. If not change, it's very serious, right? ඇයි යාලා එහෙම වෙනස් කරන්න නැහැ කියන්නේ අවංකකම පිළිබඳ ප්‍රශ්නයක්, right? If not change is a question of integrity. And therefore, the best thing auditor can do, don't audit such company, go home, withdraw. And with that, we finish this case study, right? So, then we can come to the next case. You know how fast we are going now? Right. So 120 marks done. So let us go to the next question. Now again, we are looking first very quickly to get this. Sorry. This is, we have to go to the, this is the question, right? Hold on, yeah, here. Right. So this question, okay, so as we always do, let us go to this. Outline the action auditor should take on matters, observation, identify. Because we have to read and tell what are the matters, right? So let's leave that, because we have to read the question to get there. But අපි බලන්නේ මේ crack කරන්න concept තියෙනවද? Is there anything to crack before we answer? Yes, here, assess whether you agree with audit team statement regarding CAM. Remember about CAM, I told you CAM is coming from MSM. Most significant matters communicated to the TCWG. There were Greek වෙන්න බෑ. හරියටම දැනගන්න ඕනේ, right? So the CAM can be due to three main reasons. It can be a significant risk, it can be a significant judgment, it can be a significant transaction and event that took place during the year. In addition, CAM can also in relation to certain policies which are relevant to users' understanding, etc. But these three are critical. So what are the areas? Again, this is very similar to in the previous case that I explained to you. You see what is a significant risk, right? That is about again wrong. IR is anything that you can apply to CUM framework, right? Complexity, significant judgment, uncertainty, those are SRs. Outline procedures. Now, if there is a CAM, what auditor can do? Procedures that auditor should perform on the report regarding the CAM identified in the above. So that's about the CAM. Then there is a balance part, that 10 marks there, we can easily get. Then there is a balance mark, analyze threats to independence, if any, right, in undertaking the above proposed services, including the safeguard SKS should have in place. So this is about threats to independence, right? Proposed service. We don't know the proposed service, but we know one thing, that threats include SASFI, self-review, advocacy, right? Self-interest, familiarity, and intimidation. And this is going to affect fundamental ethical principle. Therefore, we need to have safeguard. ඕක තමයි theory framework එක. Now, let us go to the first question. They say outline the action, but we have to read what they are. The audit of financial statement, okay, 5 marks. What action to take depends on what is the audit of financial statement of Neon is in progress. The most recent year is 24. Principal activity has been manufactured in electronic chip, right? So electronic chip company, SK is the auditor. Neon audit is in completion. For the current year audit, the auditor has determined here OML is given. Overall material level of 50 million is given. And performance metal is 38 million is given. Students, please remember, they ask CAM in this question. Usually, if you are reporting CAM, you are giving in the audit report. If something is not material, it's not a candidate for CAM. Therefore, when we write this CAM answer, this 38 million and 50 million is very relevant. The finance manager is a chartered accountant who report to CFO. The accountant is a qualified accountant. My goodness, he left the company from January. This period is important. January to April, there is no accountant, right? I mean, qualified accountant, January to April. The following are the issues. There are 3 issues. Then they are asking outline the action auditor should take on the matters, identified, right? So what is the action auditor should take? This action. Now actually if you are a logical student, auditor can take two action, right? First you inform to correct. If don't correct, change the opinion. When it comes to informing, what are the things auditor is going to inform? And that, even without reading this, you can tell one of the things. There are two important standards in auditing: auditor's communication standard. Right? You see everything. Right? Communication. Tell the management to change the opinion. So when it comes to communication, there are two important standards. One is, remember I told you about CAM එකෙන් MS වලින් most significant matters auditor වැදගත්ම තොරතුරු management එකට කියන standard එකක් තියෙනවා, right? So those are 260 standard series, and there is another standard specifically that auditor should communicate. MSM එකනේ 260 standard වලින් තව එකක් තියෙනවා 265. The other thing auditor has to communicate is weaknesses in internal control. බරවචනයක් කිව්වොත් deficiencies in internal control. If there are weaknesses, deficiencies, deficiency, this has to be communicated. එතකොට මේකේ තනිකර තියෙන එක්ක CAM එක්ක deficiency. So that means what examiner has tested these two. Again, you have to get your concept card. So what are the MSM, right? And that is leading to CAM. Most significant matter, CAM එකම යටත් පෙන්නවා, and deficiency කියන්නේ මොනවාද? So you have to have a high level knowledge. Then let's see ABC. And now we will decide now itself that මේකෙදී මම කියනකොට උත්තරේ ලියන්න. Then we save the time. I'll give you time to write. Like in a physical class, students, please write down the answer. Right. Further defined policy. Journal entries are prepared by the accounts assistant, which is approved by the accountant. Good. This is segregation of duty. This is a control. This is called control activity. It was noted that journal entries from January to March, we know January to March something happened, no? January to March have not been approved. As a result, auditor performed detailed testing to ensure journal entries are valid. So this is a concern auditor should communicate. This is a internal control deficiency. Please write, journal entries are not approved because during the period from January to April, the accountant is not available. First bullet point. The second bullet point, journal entries usually, these journal entries has the inherent risk. මොකද ඒක manually කවුරු හරි දාන debit credit එක. Please write, because journal entries carries inherent risk, right, which could even lead to fraud, this needs to be communicated to those charged with governance. That's the action. Action එක තමයි communicate to TCWG. Remember to talk about the fraud risk. අනික උත්තරේ බොහොම clear නේ, approve කරලා නැහැ කියන එක obvious answers. Then employees are provided advances and these are to be settled within 30 days. However, advances amounting to 5.6 million remain unsettled. 5.6 million advances remain unsettled for over 90 days. No follow-up actions have been taken. The amount is considered below the materiality amount determined by the auditor. Now, what do you say? Although it is below the materiality level, you have to inform in this case or not? What do you think? Yeah, what is your answer? Remember, අර mechanically බැලුවොත් පෙනෙයි මේක ඇවිල්ලා මේ material නෑ 5.6 million. No. Advances not settled by employee is a serious issue. Team in and laid in කියලා සල්ලි misuse කරන්න පුළුවන් තියාගෙන personal වැඩවලට. So that it leads to fraud risk. The moment fraud risk comes, you have to have a separate materiality level which we call particular materiality level. Even a small amount can be significant. Therefore, please write down the answer. The fact that, please write, the fact that the advance remain outstanding for more than 190 days clearly provide opportunity for the for the employees to misuse. The proper word, if you want to use from fraud standard, is misappropriate. Misappropriate. Misappropriate cash. And some of these employee may involve senior management. Therefore, this needs to be communicated. So, ekat communicate karana. Done. Then one bank reconciliation statement with respect to non-operating bank account has not been prepared. Okay, bank rec is very important. But this account is non-operating. So balance also agreed. There's nothing to report. No. Don't do anything. Nothing to do. Because this is a non-operating account, it tallies. No need to do anything. 5 marks done. ඊට පස්සේ බලමු cam ටික මොනවාද කියලා. දැන් cam එක ඔයාලා දන්නවා because in my previous question I also told you what is a cam. දැන් cams communicate කරන්න ඕන එක next question එකනේ. cam එකක් එන්නේ significant risk, significant judgment. ඔය දෙක තියෙන තැන් වල right, it is a most significant matter, board should be aware. Because why? Wrong is high, inherent risk is high, or control is failing. So look at it in that way. Finished good amounting to 345 million. There was a 40% increase compared to the previous year. So the FG has increased. The management has made an assessment on the NRV. So NRV assessment they have done. It has faced an issue with selling price due to market competition. The NRV easily assess karanna. A detailed assessment. See, they have given detailed assessment including the judgment made in deriving NRV adjustment of 105 million was available, and go above and see maturity level. So maturity level is 50 million. It's above even overall maturity level, right? So 105 million available. A provision of 85 million have been made. So 105 million NRV adjustment was made available. Out of that, a provision of 85 million has been made. So what, this is a cam or not? So please write. Now here we have to answer two things in this question. Ekak, assess whether you agree that this is a cam. So inventory, do you agree? Yes. Why? The assessment of NRV includes significant judgment and assumption, and it is material, therefore it is a cam. Done. Then what are we going to do on that? Outline procedures that you are going to do on the cam. So simple, right? So both you can say, so what regarding inventory? Now in that type of answer, okay, let's get into inventory and answer that. Then if you read, that answer I'll help you to write. So basically what we have to say, why cam and what to do, right? So answer, ඒ වගේ වෙලාවට හොඳම දේ මේ වගේ table එකක් ගහලා reason for cam, and then procedures to be performed. Right. So before we write the answer again, let us see what are these cams and are they actually cams based on this definition, right? So we already looked at, but this is a final check to see how the points that has to go to the answer. The first one, assess whether we agree or not. Can we say yes or no to these 4 bullet points? Is it a cam or not? That decision you have to make. And then if it is a cam, you need to justify why it is a cam. Obviously, why it is not a cam. And then remember, if something is a cam, key audit matter, auditor can't just sleep. Auditor has to do some work to address that key audit matter. Now I told you, one of the example for cam is significant risk. And I told you significant risk is a patient in ICU, no? So ICU එක ඉන්නවා නම් මොනවද හරි කරන්න ඕනේ, right? Then only person can come back to the normal ward and go home, right? All right, so 3 points if you look at, and one very important rule when you decide this 1, 2, 3, 4 to see whether it is material. If something is not material, why it is a key matter, why it should come in the audit report. Therefore, please remember the above material level, right, that we looked at, that is where is the material level? So that is 50 million overall and 38 million, right? So if something is, I mean, well below that, that's not a, CAM. So on that basis, if you really look at the inventories, 345 million, and then there is a significant increase in the inventory, and management make an assessment about the NRV. The reason why NRV assessment is done, there is a problem about recoverability, because they say there is an issue where the selling price has come down because of the competition. A detailed assessment on this, including the judgment made in delivering NRV, and they have done a detailed assessment on this, right, including the judgment made. Then may ඕනේ වචනත් මෙතන දීලා තියෙනවා, right? You know this word judgment, right? In the NRV adjustment of 105 million, they have adjusted the finished good NRV, and then provision in addition to made raw material, right? So raw material provision is 85 million. Now both of this, now if you directly ask what are you going to do, we need to understand how they developed it and whether it is reasonable, right? So those are the points. So now first is, do you agree that the first point is a CAM? Answer is yes. Why? It is material and it is fitting to the criteria of CAM. The first criteria, significant risk, appears to be significant risk. And then, because why? It requires special attention, it's material. Because it also involves significant judgment. So we can write in the answer both the fact that it can represent significant risk and specifically it involves significant judgment to bring down the inventory to NRV, as well as to make a provision of 85 million. And remember, both are material. So therefore answer is yes. And then what are we going to do about it? We will decide. So deferred tax 15 million, so not material. Answer is no. If something is material, don't bother, because whole auditing work on the concept of materiality level. Then it talks about an impairment assessment of PPE, right, due to the current business performance. Right, the business performance has dropped. The assessment was done by the accountant, and the assumption used, see the word assumption used for assessment, was approved by the committee. It was concluded that the asset was not impaired. Now in a context where, remember, whenever they say why impairment was not done, if you are a skeptical student, even auditor has this concept of professional skepticism. You need to ask why it was not done. Remember, can there be inherent risk due to management bias? Management bias coming from inherent risk factors, right? Because you can be very much biased when there are significant assumption and judgment. In what? In doing the impairment assessment. How are you going to say no impairment? Because you are comparing carrying value and the recoverable value. If the PP carrying value is 100 million, you are going to do a calculation and show, look here, my recoverable value is 120 million. So how did you do this calculation? You have to do a cash flow, profit forecast for next 5 years, the corresponding cash generating unit. If you show higher cash flow to come, then you will not impair. So how do you know reasonability of those assumptions, the revenue growth in the cash flow calculation done? That's called value in use calculation. The මේවා Greek වෙන්න බෑ. As auditing student, if there is another paper financial report and you must know how impairment is done for a cash generating unit. What are your cash flows? In value in use, you discount it and show whether the present value exceed the carrying value and say no impairment. So certainly this can be a yes, because it involves significant judgment. Done. Then the last one is actuarial valuation, right? So there is actuarial valuation has been done for 3 years, right? The valuation involves certain assumptions. Here also assumptions are there, right? In retirement, in calculating the retirement benefit plan, obligation according to the past audit experience, there had been no misstatement. Now, and then total amount is 86 million. So that seems to be material, because if you look at on a materiality basis, yeah, it is about materiality. But in terms of the risk, do you think this is significant risk or it involves significant judgment? එහෙම බැලුවොත් ඔක්කොම significant කියලා audit report is a full of scam. But if you compare impairment review for a very specific cash flow forecast you are doing, discounting, considering market assumption versus your actuarial valuation, which is based on your employees, basic assumption is salary increment, employee expected retirement, and discounting. These are observable assumptions where there is limited room for high level judgment, and the judgments are supported highly. Therefore, this is not a CAM. You can conclude as not a CAM. The conclusion tika hariyata gena එක හරිම වැදගත්. You see, when you do that, answer is nothing. Now we have to write answer to only 3: the inventory, impairment, and yeah, those two, right? Inventory and impairment. I mean, the second part of the answer we have to write only those two. Right, now we can easily write. No, why not write then? So go back to our, I think we already started the format also. Yeah, so don't worry about my handwriting, that is horrible. Right, so the first point is we are going to talk about inventory. Right, so inventory, we have both finished good, NRV adjustment, and then raw material provision. And if you look at these amounts are significant, right? So the value, if you see, that is 100 and sorry, that's the value. Yeah, so that 85 million, right? NRV 105 and 85. So this is 105, 85, both are material. So now what are we going to say? The first point, both adjustments are material. Therefore, one eligibility, right? Both adjustments are a material. So answer is, remember, you have to say CAM. This is a CAM, inventory valuation, inventory finished good. This area is a CAM. You have to say this is a CAM. Why one is material? The second reason is, remember our famous word, significant judgment, right? NRV assessment as well as inventory provision involves significant assumption and judgment. And also when there are judgment, right, with possibility of management bias, that you can always say with possible bias. Why there is a bias? Given the adverse business environment, right? Given the adverse business environment, right? So then that yeah. And then, so these are, I mean, this is more than enough for you to say. And the next thing is, මේකම අපි ඉවර කරමු මේ පැත්ත. විතර බලන්න එකපාරම ඔක්කොම ලකුණු ටික. Now if it is a cam, I am also answering part B. What are you going to do about it, right? So the part B of the question says, what are the procedures that you are going to do? Outline the procedures for the cam. So the procedures. Now here you are going to look at FG, NRV adjustment and RM. Now see how the marks allocated for this is only 3. Then don't write a detailed answer, because you have to write, this is not only for inventory, the other cam is impairment. So then very high level answer. If it is a detailed answer, detail. Remember, this is an accounting estimate. In any exam question, if it is accounting estimate, your answer will have very specific word. One of the big words that auditor can always use is reasonableness. And that even in auditing standard, that is what is required. Auditor should assess the reasonableness of the NRV adjustment, and both you can write. So auditor should assess so that, okay, let me write that. Assess the reasonableness. That's a key word of what? Of assumption use. And sorry, I forgot to tell you one thing, right? Even before you assessing the reasonableness, obviously one of the important thing that you have to do is you have to understand how they did it. Explain how did you do the NRV calculation. Now NRV is your expected selling price minus your cost. So how did you derive that? What is that? If they say no, somebody gave, can't. So then very important thing before you assess the reasonableness, understand the basis. That's the key word here, is basis. Understand the basis, right? Use for both. One is NRV adjustment, other one is inventory provision. Now when they will explain this is our basis, then inside that you look at the calculation and see what is the assumption, what is the assumed selling price, right? Assess the reasonableness of the assumption used, right? Based on auditor's knowledge. Knowledge of the business, because auditor knows that usually this is selling at this price. Now how can you put a price which is very close to the which is above the normal selling price in the last quarter, like that auditor can challenge, right? So now these are the 2 points that we can write. And then additionally, if you want to actually see whether this is reasonable, auditor can select a sample of the selling price that they took, and subsequent to the balance sheet date, check whether the prices at which inventories have been sold, right? For a selected sample, compare, if it is NRV, right? For NRV with subsequent selling price. Auditor can check on a sample basis, and then auditor can also check the moments of raw material. For those who are provided with the provisions are adequate, right? Check the subsequent movements of raw material. So this is more than enough, right, for that answer. And now we'll come to the next answer. That is the next CAM that we decided is impairment. PP impairment. Why it is a CAM? So they haven't given a lot of things in the exam case study, therefore you can write the general answer. So what is given is that they have simply done accountant has done the impairment and no impairment was done, right? Neon carried out impairment due to current business performance. Because why you are doing impairment, there are indicators of impairment. The business is not doing well, right? So why it is a CAM? This is a CAM, considered as a CAM. This is a CAM. The reason is that we assume it is material. Obviously, PP impairment can be material, but the numbers are not given. Assume this is material, and impairment usually involves significant assumptions and judgment. And then you can also write the previous reason, management bias to avoid impairment charge. So that is like a fraud risk factor. So these are enough reasons. So then what are you going to do on impairment, right? What is the here right now, any impairment test, there is a standard calculation, right? So now you don't need to say that, what you can say that, or auditor should obtain, what is the basis for impairment? Obtain the management impairment review. So the first thing is, give me your impairment review. That is your value in use calculation, right? Obtain management impairment assessment, right, which involves, right, value in use calculation usually, right, with future cash flows for the CGU. So remember, impairment is always done for a cash generating unit. That means if it is that for a part of the business selling, now you remember Neon's business, right? What Neon is doing. So are they saying that? Or not more detail are given on the business. Anyway, so now if you have a big company, the company producing spare parts, they are making losses. So then you do impairment for the assets in the spare part business. So now you got the calculation. The second thing is the same answer that you write in the above. Assess whether now if they are using sales growth of 10%, the past growth is only 5%. How did you apply 10%? Your discounting rate is very unreasonable, right? So that is, auditor assess the reasonableness of the assumption, that point. Assess, very similar to the point we wrote in the previous answer. Assess the reasonableness of assumption. What are the critical assumptions in a usual impairment calculation? Sales growth, right, discounting rate, things like that. Assess the reasonableness of the assumption, right? So these are good enough answers. If you want to write more detail, we can write, and usually you can also write, if you have a doubt about any of these assumptions, you can obtain a management representation later. And then if the calculation, if required, now actually you have a doubt whether these machines are usable, if required, obtain the support from whom? Obtain the support from an expert. It can be the auditor's expert or management expert, say to you, to see that there's a technical issue or whatever, you can do it. So those are the, two where we need to answer. I think the balance part, if we go back to the question, I think we justified why others are, so we covered impairment, and this is not a CAM. So please say it is not a CAM because it's not material. The other one, please write down why actuarial valuation is not a CAM. Please write it is not a CAM. Right? Why it is not a CAM? Right? Actuarial valuation. Not a CAM. Why? Because although it involves assumption and judgment, two reasons you can write. Assumptions and judgments involved are usually not complex and not only that, and are observable. That's the key information. For example, salary increment. You can say, have you seen the actuarial valuation calculation, right? Salary increment. Then the other reason is that no past misstatement, that also given in the case study you can cite. So this is good enough. So those are the answers for that segment. And then our last segment of this question is there are two ethical scenarios. Analyze the threats to independence in undertaking the proposed services. So let us see the two services. Right, these are the two services. I mean only two sentences, right? But we need to really understand before we write the answer. Conceptual clarity is very important. Neon is expecting to acquire another business as a part of diversification strategy and require these audit firms to perform a buyer side due diligence. You know, due diligence is a check done. Now, before the marriage, you have to find about the partner. No? Like that, due diligence means before acquiring a company, audit firm may go and do a check whether assets are there and assets are valuable. So that finding will be very important to decide the price at which they purchase, right? The fee will be determined. Here the fee auditor is going to get determined base fee is a percentage of the purchase consideration. My goodness. Remember, as a golden rule, this is your knowledge. This is called contingency fee. In auditing, the fee, contingency fee, right, is not acceptable if it is audit engagement. Fee cannot be contingency. Contingency fee, no way. And the moment fee is contingent, there is a self-interest threat, right? Because of the contingency fee, therefore, contingency fee arrangement is not at all acceptable. The first issue you should note. The other issue, being the auditor, if you are going to do the due diligence, what will happen? There are two bigger risks. Remember, as a golden rule in any ethics question. Now, if you apply SASFI framework, right? So, I'll read the both case study. This is due diligence. The other part says management requires understanding the implication of the recent changes to the tax legislation. Changes to the tax and require firms to make an assessment of the areas that will be affected. That's the tax engagement. Now, මේ දෙකටම උත්තරේ ලියන golden rules ටිකක් තියෙනවා. So these are called, remember, topic is NAS. Now if you look at my concept cracker approach, you should be able to crack the NAS. How do you crack the NAS? First of all, what is NAS, by the way? Where is the... here. Right. So right, now we will crack the concept of NAS. So NAS refers to non-assurance services that auditor provides. So remember, there are golden rule. This is valid in any answer if you learn this principle, MCQ, right? In non-assurance services, the bigger out of SASFI framework, this is our framework, right? SASFI, I explained to you earlier also, threats. The biggest risk in NAS is self-review threat, because you are going to help the client to do something. You are giving some services. Now, in our example, the service is due diligence, right? Due diligence, right? As a part of the due diligence, and see, it says that your fee is going to be based on the purchase consideration. It looks like audit is going to help the negotiation. Who is supposed to do the negotiation? It is the company, not the auditor. As a golden rule in any NAS, auditor is prohibited to make, right? Should not make any management decision. Should not make, right? Any management decision. Any answer, make it with runway. Should not make any management decision. That is out. The next risk that auditor should face, auditor may face as a part of the due diligence, auditor is going now, let us say goodwill calculation. Now, if auditor is going to help with the valuation and see valuation is okay or not, there is a goodwill figure come in. Later, same auditor come in and audit in the goodwill and the valuation. So what will happen? Same person is helping to get the figures and auditing. That is the self-review threat, right? Self-review threat when after the acquisition, if auditor were to audit the same entity. Therefore, if you want to still do this, make sure number one, fee is not contingent. Number two, auditor is not making any management decision. Number three, this due diligence is not this is called Chinese wall. There is a wall. Audit team is separated, due diligence team is separated. This is done by a separate team. So those are the golden recommendation to avoid any risk. So now we can write the answer, right? So please write due diligence involve the issues we have. Threat we have. One threat is okay, we'll take the self-review threat. So there we can say self-review arises if audit firm or the same team involves in auditing financial information of the acquired company. When you audit the parent group audit, financial information or transactions related to acquisition. Example, goodwill. So that's self-review threat, right? The other one, you can write another connected risk of making management decision. Example, price negotiation as the fee is contingent. Example, price negotiation, fee contingent we will put separately. Why auditor is going to, there is a biasness which we call this risk as what? The moment contingent fee is there, it's called self-interest threat. Because you have money, you can earn more money. Therefore, somehow bargain and do whatever. So, the self-interest threat is mainly coming from due to contingent fee. Contingent fee arrangement. Contingent fee arrangement means audit is going to get a percentage of the purchase consideration. So please write safeguard. So what are the safeguard? I'll write in a different color to address this safeguard number one, right? So I wrote somewhere what is the golden rule? Should not make, auditor should not make any management decision. Number two, the fee should not be contingent, fee should be fixed, and should not be contingent on purchase consideration. And then third one, separate team should undertake the due diligence assignment done. So the next point, the next case given is audit is going to assess the tax impact, right? Tax impact of recent changes. Now tax law, there are certain changes, understanding the tax implication, right? So the next question is understanding the implication of recent tax changes. Implications of recent tax changes. So what are the ethical risks if you apply SAS-FI framework? Remember, the biggest risk is if you apply SAS-FI framework, which one is applicable? Self-review, right? One risk is self-review. So why self-review risk comes? If any of these tax services connects to the tax calculation, right? If the service relates to either current tax calculation or deferred tax calculation which the same firm is going to subsequently audit, that is not acceptable. Instead, you may give an assessment of the impact without any information, without any input on the tax calculation. Then you can do. Again, it is recommended that this is done by another team. An auditor is not doing any calculation, right? And the scope should be clearly agreed, and if there is no responsibility for management decisions, the same thing we can write. So, but specifically, mainly self-review threat, I am writing the self-review arises if auditor involves in calculation, in tax calculation. Now you can write within bracket current and deferred tax both, because auditor subsequently audits the same information. That's where the self-review comes. So therefore, what are the safeguard? Safeguard number one, the work should be limited to the impact assessment. You can show the impact like a presentation. The work should be agreed to ensure it is only an impact assessment, right? Not a calculation. Calculation of the figures that appear in the financial statement. So this calculation in financial statement, obviously in financial statement, right? So only in that, and done by a separate team. Done by a separate team, that's the Chinese wall. And the last one is no management decision, or no decision on behalf of the management, right? Done. That finishes the question, I mean that segment. And then our next thing is so we have finished the most difficult one. Then we can shift to other two segment, which is your smaller mini case studies and the MCQs, right? So that is our next segment.